So here's the average monthly house payment versus the average monthly lease payment. And as you can see, it doesn't paint a really pretty picture now, does it? To make matters even better, the data provided on this graph assumes conventional financing with a 10% down payment. Yikes!
Yikes!
In other words, the real cost, particularly to low and moderate income homeowners, is even worse as they're generally looking at higher LTVs and higher MI amounts. And as you guessed, we're going to make an argument as to why you should not buy a house right now, but I want you to listen real closely because there's a silver lining in here that I think suggests otherwise, but let's keep going down this road.
Now here's the issue. Here's the average rate on a 30-year fixed rate loan. This graph goes back to 1975. A long time. Look at the red dot. That is the rate increase that we've seen and we're suffering from right now. It's worth pointing out that outside of the 1980s, this period has seen the largest and fastest increase in mortgage rates for at least the past 45 years.
And as such, it should have a really big impact, right? You would expect that an increase in mortgage rates would have a huge impact on the price of homes, right? The biggest increase in cost generally means the biggest decrease in demand and price. And it doesn't matter what you're selling. It doesn't have to be a house. That's how supply and demand works in this world, you see. Well, at least a normal world, meaning a world where the Federal Reserve and the government didn't intervene and muck everything up all at once.
However, when we look at a graph of home prices over the same 45-year period, which also dates back to before 1975, we can see, well, a dip in prices, but not nearly the dip you'd expect when you consider astronomical increases in mortgage rates over the same period of time. It's as if prices came down grudgingly and can't wait to snap back up to their feverish upward climb. In other words, unaffordable today is going to be even more so tomorrow.
Or to put this whole thing into perspective, here's a graph of 3 examples of interest paid on a $400,000 loan with rates at 3% at the top, 5%, and 8% at the bottom. This is absolutely crazy to look at now, isn't it? The red to the right over there on all 3 of these bars represents the amount of interest paid for those 3 rates. Really, this visual examination shows you how drastic, I mean just catastrophically drastic, the difference is with interest paid on rates between 3 and 8%. Now, that's where we've recently been, at the 3s, and more recently gone with rates to the 8s. This is a mind-numbingly huge difference in the amount of money a homeowner has to pay on that $400,000 house, and this is what everybody's going through right now.
In short, that means buyers get a lot less home for their dollar. Before the Fed started raising rates, a person with a monthly housing budget of $2,000 could have bought a home valued at more than $400,000. Today, that same buyer would need to find a home valued at less than $295,000.
And even with all of this said, prices, they just keep climbing.
Here's a graph of the median age of home buyers, both repeat and first time. As you can see, the average age has increased in all categories over the past 20 years. The reason is simple and obvious. So what does this tell us?
Well, it tells us that first time and young buyers are still stuck on the sidelines. About 1/3 of buyers this year were first-time home buyers, below the historic average of 38% according to the National Association of Realtors. While they still exist, they'll be going away soon. The median first-time buyer was 35 years old. Yikes, that's getting older. That was the second highest record, only behind 2022's peak of 36 years old.
So this all paints a pretty scary picture, but is that the way we should take it?
Hey, February 22nd and 23rd, Carl White and the Marketing Animals are going to be having an AI shindig down there in Clearwater, Florida. They're going to teach loan officers everything you need to know about integrating AI into your business. And I don't know about you guys, but I'm looking at this crap and it's like everywhere. So it ain't going anywhere. Be an early adopter, it'll probably help your business. Check these guys out. It's a fantastic time down there in Clearwater. Fill it out. Understand that right now it's an election cycle and both sides of the aisle have now taken up affordability in housing as part of their talking points. They got to scream this from the bully pulpit, so hopefully they'll do something about it. And number 2, we don't have time to get into this, but there's a very popular theory based on an 18.6-year real estate cycle, and it looks pretty crazy, and it goes back over 100 years. This predictive theory has the housing market hitting the skids in 2024, which would bring much needed relief to buyers. And I think we're kind of seeing that, aren't we? You know, relief particularly for first-time homebuyers. And finally, even if builders don't get off their asses and build more homes, which it doesn't appear they're doing to the numbers we need them to do, sadly, my parents' generation, my mother, who I love as much as you love your mother, you know those baby boomers, the largest real estate holders in the history of the United States are, well, they're all starting to die. And that means, in a very morbid way of looking at this optimistically, more inventory is going to be hitting the market over the next decade. Again, it brings me no pleasure to say this because I love my mom as much as you love yours, but it's just the truth. But the point is this for you. It's always been the same thing. We have to work in markets both good and bad. This market can easily be interpreted either way. It can be seen as good or bad. Now, as a salesperson, which I think you know you are, I hope you understand, only one of those perspectives is going to afford you the opportunity to succeed. That being positive. And why wouldn't you be? Because think about it, I say this crap all the time. Be positive because it just beats the damn alternative, now doesn't it? Hope this helps, and we'll catch you guys mañana.